Hello, everyone, and welcome to today's show. Let's just dive to it again. After quiet weekend, now there's more news. So first, Facebook makes first blockchain acquisition with Chain Space, but is only according to rumors. Now, the social network Facebook has quietly hired the team behind Chain Space. Chainspace is a small blockchain startup founded by researchers from University College London, Shadow has learned. Chainspace was building a decentralized smart contract system that could facilitate payments and other services through blockchain technology. So it's something like Ethereum. The acquisition of Chainspace team, a move known in Silicon Valley as an ACQUI hire, is the clearest sign yet of Facebook's ambition to be a big player in the nascent blockchain industry. Veteran Facebook executive and former PayPal president David Marcus, who was also formerly from Coinbase, was tapped to lead Facebook's blockchain group earlier this year. According to Chainspace's August 2017 white paper, the team wanted to build a distributed ledger platform for high integrity and transparent processing of transactions within a decentralized systems. So one of the main goals is to improve the transactions through blockchain and speed of transaction, which currently functions much more slower than traditional financial institutions like Visa. Um, Other than that, 4 of the 5 researchers behind Chainspace academic white paper are joining Facebook's blockchain group, according to people familiar with the matter. In fact, 2 of the white paper authors, Alberto Sonino and Josh Denizis, already list their employment as blockchain researchers in Facebook's London office on LinkedIn. Although there's no official response from Facebook nor Chainspace, but the fact that there are all these sources that give out this information to Shadow, and also the 2 of the white paper authors have actually changed their profile on their LinkedIn. It's quite a clear indication on Facebook making a huge commitment into the blockchain space, and that ought to tell you again what the future holds, because now you have big names even like Facebook coming in. Next, we have KRAKEN buys UK exchange crypto facilities for at least $100 million. Now, US cryptocurrency exchange KRAKEN has acquired UK cryptocurrency exchange and futures provider Crypto Facilities. This is official news, right? Published on February 4th. Crypto Facilities, which began operating in 2015, so it's about 3 years history, is fully regulated by UK's Financial Conduct Authority. So this will really expand KRAKEN's reach to also cover the Europe market. The thing is, they don't exactly say how much is the acquisition price, only said that it was a 9-figure deal. So that means the acquisition price is at least $100 million. And that's really a lot for a crypto exchange, right? This is still a really relatively new industry, and the price tag is really high. So that ought to tell you the company really believes in the future potential of crypto. And that means they do see a lot more people coming in and trade cryptocurrency in the future. Hence, they are willing to pay such high price. So apart from them, Bittrex also recently opted to launch an international counterpart to its trading arm because they want to segregate the US users, right? Because they want to expand their reach to more international markets. And also US regulators are generally, at least to date, it is still more strict compared to other markets. So, before waiting for US to liberalize, they already want to expand their reach, right? Also, you must understand that, and later on you will see that the trend of trading now, if you don't expand, basically, the volumes are really very thin. So the only way to grow in this market is to expand your reach out to more people. So at least, right, you are hoping that, by just having more offices around, you can at least reaching out to more new users, right? Rather than tapping on the same user base, yeah. Of course, one is key for this is really good for KRAKEN is that now they also have a futures provider. So they currently also can tap into the futures product capability of crypto facilities, and that's really good. And not only that, this new exchanges, the crypto facilities is also regulated, so that has no issue. And yeah, so it is really good because then with all this that it can attract a lot more institutions, because institution they like futures product because it gives them a hedging tool, and also the fact that it's regulated gives more credibility. Next, you have Switzerland Crypto bank SEBA partners with mortgage bank Hypothecar Bank. Switzerland-based crypto bank has signed an agreement to use their core banking system, and the partnership will allow for the implementation of SEBA's decentralized software into Finstar. Finstar is the core banking system, allowing SEBA to use Finstar's conventional services, right? So the fact that I see this kind of partnership as basically the crypto bank doesn't have to spend a lot of money because a core banking system will cost a lot to build and the time taken to build. So rather they just tap into an existing infrastructure that's already been built up, right? But of course they pay a fees, but still it is time to market is relatively fast already. SEBA is set to get or they expect to get their banking license by mid this year. Good news that we have green turns frown upside down on funding success. What started off as a slow fundraising from within the cryptocurrency community to support a privacy-geared coin green has managed to come across the line with 20% more than target after the lead developer voiced his frustrations. The developer team had opted to avoid fundraising through an ICO and bypass the option to take part of the miners reward, akin to the funding model for Zcash. But will the €65,000 raise thus far be adequate enough? So, firstly, it's very interesting that green is a new privacy coin. A lot of people regard them as like the Bitcoin 2.0 because they have the similar beginnings like Bitcoin, where they had anonymous creator. And also, but the interesting thing about green is that it is a community-led effort, so very similar to Bitcoin, but they are very much centralized towards privacy. So their differentiation is really their privacy, and they're able to mask all the transaction details, even all the sender and receiver details as well. So now, and this is because it's a community-led effort, and they are really depending on the community funding. So it's really just a very voluntary kind of funding, and so it's just very interesting that it is led by individuals and kind of the people power, and now they seem to have it surpassed their funding goals after the developer voiced his frustration. So it's really reflecting the true community nature of this coin. The fact that of course they avoid a ICO is really good, that they will never be classified as a securities like Ripple or XRP now still has the uncertainty, right? Whereas Bitcoin and Ethereum, because they didn't go through the ICO route, so definitely they are safe to be traded, and at least on the security front they have the pass. Next, Augur blockchain powered prediction markets predicts the 2019 Super Bowl winner successfully. So as shown in the image below, so before, of course, prediction market, people place bets before the results are actually out, and based on the screenshot that was taken before the expiry date, which is February 4th at 10 a.m. UTC, the participants in Augur has actually predicted the Patriots will win, and the odds are 49%. Yeah, and true enough, they won, right? So this is basically giving a lot of free publicity to Augur and their token reputation, or REP. The unique thing about them is that they play on the notion that actually the people power, or the people because they will be incentivized to make a correct prediction, then the people will actually, the more people, or at least those people who are interested, will actually do more research on their own. And if more people did their independent research and they still point to one single result, in this case is Patriots will win, then the chances of that happening is actually much higher than even experts or analysts doing their own predictions. And this seems to be holding true for Super Bowl results this year at least. And of course, very attractively, Augur charges a much lower fee of just close to 2% fee for people to place a bet, versus the traditional sports books better like Nevada. They charge something like 7.3% fee. So that is a huge difference for people who want to play bets, right? So that's why REP itself is gaining a lot of publicity, and the prices has been going up lately. Next, also in relation to this prediction markets, Cardano and Ethereum co-founder Charles Hoskinson joins predictive analytics firm. So Cardano ADA CEO and Ethereum co-founder Charles Hoskinson has joined a predictive analytics firm called AUGUR as a senior advisor. That means he was still holding his role in Cardano and Ethereum, right? But now he has just an additional hat. And what is AUGUR? AUGUR is established in 2014, and they claim to be the first automated predictions engine in the field of business decision making by means of blockchain-based and artificial intelligence or AI-powered analytical platform. So last spring, they raised 45 million in a token pre-sale for their technology. So it is very, very good, I think, that they are able to attract Hoskinson, which is a very experienced expert in this field, right? Both in the field of cryptocurrency and also decentralization. And he has also experience like on Ethereum and Cardano both, which has the smart contract platform, right? Which can really, really help this predictive or prediction markets. Yeah. Next, TurboTax to add new section for calculating crypto taxes. US tax preparation software TurboTax Online has reportedly partnered with CoinsTax to offer cryptocurrency tax calculation to its services. So the customers, when they purchase their software, they just need to import trading data directly from the major exchanges such as Coinbase, Gemini, and Poloniex, and then the capital gains income reports can be downloaded, uploaded directly. So these are all to ease the tax reporting, right? And this is really good because as more and more people use cryptocurrency and gaining majority slowly, right? But surely this kind of service provider will definitely come in very handy. Next, also we have crypto exchange trading volumes kick off year on a cold note. So this is just in fact published yesterday, a report by DIA, a research firm based on cryptocurrency focused. They have published this data of trading volumes of major crypto exchanges. And first, you see Coinbase is probably the most well-known, right? But you see their volumes compared to last month, 2018 December, is almost 50% down. And of course, if you compare with January 2018, right, it's crazy. It's like 8 billion versus 1 billion. Similarly, Gemini as well, similar picture. Binance is no escape, right? Similar, although Binance is the biggest. Yeah. OKX as well, you can see a similar trend between December and 2019 January. And that also really proves that the market is really, really quiet. Now, both buying and selling, there's no volumes, right? A lot of the sellers have probably sold off for the most part of last year. And there's not enough buyers yet into this market. It is sad that actually at current low prices, it's, you do expect and you really is the retail investors who should be buying, and many of them can afford now a lot of the cryptocurrency at very, very affordable prices, right? But yeah, things are just not happening. And while we know, of course, again, major institutions or some of the institutional players, they are buying, but this is again not reflected here because they are buying mainly through over-the-counter markets or buying through crypto funds. So again, these are not shown, right? But that we know that they are definitely accumulating. Not everyone, but there are institutions who are already in the space, right? So yeah, so when the next rally happens, then it's the retail investors who want to rush in. But then at that time, actually, it is definitely going to be much harder for them to get any more good deals. But that's how the market works, right? Yeah, it's very poignant. In that regard, Binance crypto winner strategy is to build and beef up partnerships. So the Binance Chief Growth Officer Ted Lin has said that revenue has slowed, but then they claim that the exchange is still profitable and they don't need to have, continue to raise funds like Coinbase did with a 300 million fundraise last October. So that's good. It shows that they have managed their finances really well. But what they plan to do in 2019 is to continue to build out their ecosystem to diversify the brand beyond just its primary trading platform. That means they don't want to just depend on trading. They also want to have ecosystem, and they are continue to expand their reach as well. So among many things that they will do is they just acquired a trust wallet and last summer, and this trust wallet company has recently joined the foundation in the wallet operability, and they're also going to eventually introduce a new feature to the broader fintech system. Example, giving e-commerce platforms the ability to refund crypto purchases directly to a personal wallet and users the ability to send payment requests using someone's email. So very, very convenient. Of course, they already announced that they're going to launch a decentralized exchange, right? So in addition to their centralized exchange, and this is clearly they want to cater to everyone because they do see people everyone have different preferences when it comes to trading. The more sophisticated, more advanced ones will want to use a DEX, decentralized, but the new people who want to come in, they normally will just stick to centralized exchange. And that's also why they launched Binance Academy, which is their educational portal, and they have 15 languages. So definitely they are trying to cater to the world. And that is also why they hope that people who learn through their platform will then eventually, when they want to buy, just use their platform to buy, right? So definitely they are preparing all this, right? A lot of value added free services just to hook people in early so that in the future, when they want to trade, they will remember Binance, right? So really, they capture your mind share first, right? Even for people who are not yet trading now. Very, very smart. But meanwhile, they are also expanding adoption or usage of their tokens. So really locking in the user base. Among other things is they're signing up merchants. Like they invested 2.5 million in airline payment startup Travel by Bit. So that means they are going to use the Binance coin tokens, right? Also, they're going to sign up. They sign up a lot of the merchants saying, if they accept Binance coins, either you give the customers some discounts or, just listing as a support of their token will basically attract people to use their token. So very, very smart technology, strategy. Crypto miners and Bitcoin exchanges required to register for operations in Venezuela now. So Venezuela has just published a new rule on cryptocurrency, and it basically saying now it's not comprehensive regulation yet, but now they have placed Suna Crypt in charge of all crypto-related activities, and they will be in charge of all registration requirements and the processes. They haven't actually laid down like what is the minimum capital requirement to operate an exchange, right? They haven't been so clear, but then at least now they are definitely going to have those regulations now. And that just means that they are setting up to see that how they want to limit the number of exchanges in the country, right? Although currently the number one way that people in Venezuela use to buy crypto is the decentralized way, which is through local Bitcoins. And yesterday, we have seen how local Bitcoins volumes just really spiked up in the just last week alone. Last one, Tencent surveys reveals Chinese economy is divided on future of blockchain and crypto. So China's economics experts fail to agree on the future of blockchain and digital currency. It was done by internet giant Tencent, right? It's a gaming and internet giant in China. They have sent a survey to 100 chief economists from banks, research institutions, and university, and asked them, right, basically, like, do you support the government Beijing issuing their central bank digital currency? Only 51% of the people agree. 49% say they do not support. It's really, really interesting. It's really very much divided. So I think this is really good. The results show, right, that not everyone is supportive of a central bank digital currency. I think because they do look at what happened in Venezuela, the petrol is not, although it's being issued by the government, doesn't mean people have to use it, right? And in fact, no one is using it, but everyone is flocking into Bitcoin. And we have seen already yesterday again, the volume of Bitcoin, purchase Bitcoin on localbitcoins.com is actually seen a spike, right? That ought to tell you. So it's almost like a joke. The government issued petrol, but no one is using it. So they might have seen that and that stopping them. Also, the other thing is why not, right? Just use something that the people have adopted and they have shown that they really want to use it, right? So clearly, the citizens, the millennials, are really supportive of something like Bitcoin and other private cryptocurrency, right? That are clearly decentralized and not controlled by anyone, censorship resistant, and so why not use something that everyone else also trusts? The other thing is, even if government issue their own central bank digital currency, doesn't mean other governments will trust enough to be able to trade using that, right? So thank you so much for watching, and if you like this, please leave a like and subscribe. And wherever you are, hope you're having a great day, everyone, and thank you so much for your support.